I'm Johnny Fernandez, anchor at FinTech TV, and you're watching Taking Stock.
Jesus. 2 minutes to go into the close. Welcome to the show. This is the live broadcast of Taking Stock. I'm your host today, JD Durkin. A few mere moments away from the ringing of the iconic closing bell here on the trading floor of the big board. Let's bring in the Einstein of Wall Street. According to CNBC, nervousness about the prospect of a peace deal heightened after the vice president's trip to join Iran negotiations paused because of a lack of commitment from Tehran. We're about at session lows. What's going on with the tape?
You know what? Look, we ended up having a lot came in for sale. The market just suddenly broke. It was obviously news related. We couldn't really tell at the moment what it was, but it was sort of strange. I mean, the market's been trying to get off the mat all day long, and then suddenly, you know, it came, or it was like 2:45, 3 o'clock, and it just started to break down, and it broke down aggressively. So you could tell it was news related. We have not been engaging Iran that much over the last couple of days. The market's been on its own sort of, you know, a rag, if you will. But today, you know, they came back in, and so it just shows we're still at the vulnerability of a tweet, of a story, of Iran, and that's still got us by the chokehold.
Yeah, absolutely, and we'll see what happens. Energy and technology shares, the leading sectors, utilities, real estate, and telecom, the worst performing sectors for the S&P 500 today. We hadn't expected after starting the day off in positive territory at session lows. We'll see what the close brings into tomorrow. A lot of earnings on tap.
Days, but they're difficult.
Peter Tuchman, the Einstein of Wall Street, the one and only. Thanks for being here. Suburban Propane set to do the honors. We'll pick up the rest of the Taking Stock broadcast after the bell. All right, there you have it. The team from Suburban Propane bringing about a close to today's closing bell auction here on Wall Street, ticker symbol SPH. Both doing the honors. Will also join us here on the broadcast in just a little bit. Your final tail of the tape before we bring in the great Phil Rosen. The S&P down 0.6, the Dow down, well, let's call it 0.6. The NYSE Composite Index down a clean percent, as is the Russell 2000 down 1% as well. Merck, Honeywell, Sherwin-Williams, and Boeing, your hardest hit Dow stocks. With your Dow winners on the day, UNH, Cisco, Microsoft, and Chevron. Let's bring in Phil Rosen, a man you know and love, a man of many titles, one of which, Chief Market Strategist at ProCap Insights. My man, thank you for being here.
Thank you for having me, JD.
So what was the statistic? I caught part of it. You and I were talking before the show started. 3 weeks in a row, 3%. What do you see for the markets more broadly?
Yeah, that's exactly it. Only 3 times in history have we seen the S&P 500 gain 3% 3 weeks in a row. So we're coming off that right now. I know markets are down a little bit, but historically, the last 2 times this happened, stocks were up 34% 12 months later on average. So you don't want to take a small sample size of 2 and extrapolate to what's going to happen next. But I also wouldn't be in the camp to bet against the momentum right now.
Well, I mean, I think the momentum might be difficult for investors to gauge given the uncertain nature of geopolitics right now. We just had late-breaking developments in the last hour or so. We saw the reaction. The U.S. president says he expects U.S. and Iran to make a deal, but he says the U.S. military is also, in his words, ready to bomb Iran if a deal is not on the table. How do you approach this as a trader in the short term?
Pretty much, if you look at Liberation Day last year, all the ups and downs emanated from the White House, and that's what the market was hinging on, what the market reacted to, and we are very much in that situation again. So if you look what happened Liberation Day, things roared back, and we just saw that in the last 3 weeks, things roared back. We're going to get a lot of chop. The White House is going to do what the White House does. President Trump is never going to stop tweeting. Those things are going to be consistently happening, and the market's going to figure out a way to tolerate it. And we're already seeing that the market has reacted less and less, I think, to the geopolitical noise. So I think the market is going to be more and more resilient, and that momentum of earnings and more positive headlines on the corporate side and the fundamental side, those are going to be pretty strong.
Speaking of headlines, Tim Cook out, John Turnus in, Apple shares down 2.5% today. How big a story was this breaking yesterday?
Tim Cook turned Apple into 20-bagger stock, right? He came in 15 years, 20-bagger. That is a great track record. I think Alphabet outperformed, but otherwise, Apple's pretty much stood alone in that track record. So Tim Cook had to fill very big shoes with Steve Jobs, of course, and I think he passed with flying colors given the shareholder response. But I don't know if his successor is going to be able to do what Tim Cook does. He is an engineer, so that's a pretty good sign. I'm very engineer forward, but we'll see. Tim Cook's a pretty legendary guy.
Let's take a step back more broadly and talk about corporate earnings. You and I both know, as does Peter Tuchman, these are the lifeblood of the health and wellness of the markets today. We got Tesla tomorrow, a lot of big names on tap. More broadly, how have things fared so far, and what will you be paying attention to?
The earnings story has been one of the best things of the market to start the year because there's been so much chop, so much volatility from the Iran conflict, and yet earnings, the expectations for earnings continue to go up in many cases. So I'm not too worried. I haven't been too in the weeds with earnings so far, but my guess is that things are going to continue to beat expectations, and we're just going to see the momentum carry on from last year.
I don't blame you. You're a very busy man. On top of everything else, talk to me first and foremost about ProCap's new deal with Kalshi, prediction market giant. What should people know there, Phil?
So as of this morning, we are now the only investment research offering to have Kalshi's prediction market data. We just launched that today. It's very exciting. We have a bunch of reports out at procapinsights.com that use prediction market data from Kalshi to give trade ideas, mispriced markets for investors to actually take action on, and much more. We're very excited about this. I think we are at the bleeding edge, combining AI, agentic research with prediction markets. This is the future, and we're trying to push the pace.
ProCap Financials, Phil Rosen, Chief Market Strategist, among many other titles. My man, thank you for being here as always.
Thank you very much.
Nice to see you, Skylar. Grab your mic, and Howie, you and I will head this way. We'll bring you the latest analyst calls that move the tape here on the street today. First up, Berenberg analysts initiating coverage on Palo Alto Networks as a buy. They say the company is best in class. Palo Alto shares up on the day, still down year to date. Next up, HSBC upgrading Intel to a buy from a hold rating. They say the market is overlooking a CPU-led growth opportunity. Intel shares currently in a big uptrend, up 73% since the start of the year. That's not a typo. Finally, KeyBank upgrading CrowdStrike to an overweight rating this morning. They say it sees platform breadth in an effort to directly challenge other rivals in the space. CrowdStrike shares are down about 8% so far here in 2026. How about a look at a couple notables that call the New York Stock Exchange home? Not great prints. We'll start with Colgate-Palmolive. This is ticker symbol CL, down 2% on the day, despite analysts from Rothschild and Redburn upgrading the stock to a buy. They say the company has an impressive track record amid resilient growth. Shares are up on the year, about 5%, but down on the day. And how about Reddit? This was one of our favorite IPOs here at the big board in the last few years, down about 5.5%. D.A. Davidson initiating coverage on the stock this morning as a buy. They say, we believe Reddit remains incredibly under-monetized relative to its peers. Shares have rebounded at least a bit after a 50% drawdown earlier here in 2026. Last week on the J.D. Durkin Show, the only live independent show that calls the New York Stock Exchange its home, I sat down with the great Sam Rowe of Ticker to talk all about the disconnect between how consumers say they feel about the U.S. economy and how much money consumers are still spending. Take a look. Speaking of celebrating, you were also here on the trading floor with us yesterday for the first ever close for the S&P above 7,000, rocking the 7K hats, which means the market has never closed above 7K unless Sam Rowe is here at the big board. That's the Sam Rowe indicator. Come back anytime, man. So I appreciate you joining us here to kick off the show. We've got multiple wars. We've got oil shocks. We've got rising costs for consumers. And at the same time, we've got stocks at all-time highs. Sam Rowe, make it make sense. What's going on here, man?
Yeah, there's a couple of competing, I don't want to say conflicting, but there are definitely competing narratives out there, right? There's no question that there's a lot to worry about when it comes to wars. And, even here at home, people are feeling it tangibly. You go to the gas station and you literally see those gas prices going up, and that's going to affect your wallet in one way or another. But when it all comes down to it, the stock market is going to be driven by earnings and earnings growth. And earnings growth depend on a couple of things, including what people are actually doing, despite how they feel. And it is actually the case, as much as many people are complaining about gas prices, it's usually after they've already filled their tank. The economy is not so unhealthy as People are not driving anymore. That higher gas prices are preventing them from going shopping or booking their vacations or having birthday parties or going out to dinner on a Friday night. So as much as there are all these signs that suggest that things shouldn't be great, including geopolitical uncertainty, consumer sentiment surveys doing really poorly, business sentiment surveys doing really poorly, the data continues to confirm that people are actually still going out and spending. Maybe begrudgingly, but that's what ends up trickling back into earnings, and earnings drive stocks.
Resiliency. By the way, great comment here from Coinage. Sam Rowe, the legend. The show keeps booking the best. That's true. I'm going to do shout out to Mateo. Congrats on the new show. Thank you, brother. Sam Rowe, I want to ask you about sentiment. Sentiment feels very sour. The latest UMich consumer sentiment number is basically the lowest number we've ever seen. To be fair, it was compiled before the 2-week ceasefire was announced. If sentiment is so terrible, why are people still spending right now? And how do you think about that disconnect in this economy?
Yeah, that's a great question. And, there's a lot of nuance when it comes to sentiment, right? Like, it's one thing to be unhappy about where you think the economy might be headed. You might be unhappy about, fiscal policy, or, if you're following monetary policy, you might be unhappy about that. You might be unhappy about what we're doing abroad, policies that lead to geopolitical instability and wars and all of these things. But something that isn't coming up in the data is, what people are actually doing. And people still feel okay to go out and go shopping. People still feel okay to take that vacation because, they're still employed, right? You might feel less optimistic about job opportunities or whatever, but it is the case that the unemployment rate is still below 5%. And the layoff rate is still historically low, and unemployment claims suggest that people aren't, exactly lining up at the unemployment office. Now, all these things are certainly happening at nominal levels, and people are certainly struggling. But in the context of the macro economy and the things that are driving the markets, in aggregate, things seem to be holding up well.
Sam Rowe, you're an absolutely terrific guest, dude. The only bad part is I have to end the interview there because I have other amazing guests as well. But I hope you'll consider coming back to see us anytime. Where can people go if they want to see more of your stuff here, Sam?
Head to ticker.co. That's TKER.co. It's a paid newsletter, but I send out a free newsletter every Sunday. So, feel free to sign up. And if anyone's listening, just shoot me a note. Just respond to the sign up email, and I'm happy to extend a couple months of paid access.
There we go. The writer of Ticker, the newsletter about how the stock market usually goes up. Good friend of ours here on the show, the one and only Sam Rowe. Sam, come back anytime. Great to have you here, Sam. Thanks, brother. Welcome back to the show. Time now for a few headlines in the world of fintech, crypto, and artificial intelligence. Headlines for your Tuesday afternoon. First up at this hour, the crypto majors all flat to the downside after the close of equities here on Wall Street. Next up, Amazon deepening its AI push with up to $25 billion more into Anthropic, pairing it with a huge $100 billion cloud deal as the battle for artificial intelligence infrastructure continues to intensify. And finally, prediction market platforms like Kalshi and Polymarket, they are pouring millions of dollars into Washington as lawmakers push for new rules amid concerns over gambling risks and insider trading. The New York Stock Exchange's very own Kristen Schuller caught up with Jacqueline Felcher of Payload. They discussed the Artemis II launch and what is next for NASA. Take a look.
Market headlines, of course, dominating things as we gear up to round out the week. All eyes will also be on Artemis II tonight. That's because the Orion capsule is scheduled to splash down in the Pacific Ocean near Southern California just after 8 p.m. Eastern. Joining me now with more is Jacqueline Felcher, managing editor at Payload. Jacqueline, good to have you on the show this morning. Joining us from Atlanta, what has stood out to you about this mission?
It's been an incredible week to track this mission in real time, honestly. I mean, the pictures that come back have obviously been a highlight. People actually laying eyes on the moon for the first time in decades, seeing, an updated Earthrise image. The imagery has been stunning, but even back here on Earth, it's been just incredible to see the way that people have rallied around this, have followed the mission. As someone who is personally and professionally very excited about the space industry, it's been incredible to see all over my social media feeds, kind of the average person really excited about space again.
Yeah, the imagery has been absolutely incredible. Where does this leave us in terms of next steps for the Artemis program?
Yeah, so Artemis 3 is set to launch next year. That will be a rendezvous mission in space to try to attempt a rendezvous between one or both of the commercially built landers, which will hopefully bring astronauts down to the surface as soon as Artemis 4, which is set right now for 2028. Obviously, we're all well aware that schedules can slip in the space industry, but that is the aggressive timeline laid out by NASA Administrator Jared Isaacman. And after we get that first crewed landing, as you said, NASA is going to be off to the races. They have long-term plans to build a lunar base with rovers and in-situ manufacturing. Last month, NASA Administrator Isaacman laid out this really aggressive vision to put a semi-permanent footprint on the moon. That's really the difference with Artemis, is that people are going back to stay versus just the short missions that characterized Apollo.
I do want to drill in on that just a little bit here, Jacqueline, because that's what has stood out to me the most, right? With Jared Isaacman now leading NASA here. He was formerly the leader of an NYSE-listed company, Shift4 Payments, but just the velocity of now goals from here that's picking up. I don't think we've ever seen anything like this, have we?
Yeah, I was actually at NASA headquarters in DC when he announced all these changes a couple weeks ago. And it was dizzying for everyone in the room. Every panel, officials came out to talk about their portfolio, and it was another major change, another major change. Industry leaders are really definitely excited about the opportunities and the enthusiasm and the speed, but there's also a sense of no program is safe. Isaacman canceled the Lunar Gateway, which was set to be a space station that was orbiting the moon. Pieces of that hardware are done. It was something where the U.S. was working very closely with international partners. And even that, Isaacman has been somewhat ruthless in his pursuit of this lunar architecture, saying, we're going to cut anything or anyone that's in the way, taking no prisoners.
We can feel that enthusiasm. Indeed, Jacqueline Feldshore, Managing Editor at Payload. Jacqueline, thank you.
Thank you.
Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the big board. Michael Stavala joins us now. Michael is president and CEO of Suburban Propane, not just here on any day, but a day you get to ring the closing bell. Thanks for being here and congratulations.
Yeah, thanks for having me.
What was the experience like up there today for you and your team?
It's amazing. We're celebrating 30 years as a public company now. We're almost on 100 years in business, so some proud milestones for us.
I want to ask you about propane, the role of U.S. shale production. How insulated is propane in this broader conversation from geopolitical shocks? We had another one that rocked equities here the last 20 minutes of today's trade.
Yeah, so we're a domestic distributor of propane, and propane, we have a lot of propane in the United States. We're producing more of it now than we ever have. We're almost producing about 3 million barrels a day, and we're sitting on almost 78 million barrels of inventory. So propane itself is not feeling the same shocks as the rest of the commodity markets.
I gotta be honest, this next one, this is something I don't have a ton of familiarity in. What exactly is auto gas, and are you seeing a rise in demand for it?
Yeah, so propane can fuel cars and buses and trucks, and so we're seeing a lot more demand as fleets are starting to try to get to be more sustainable. They're switching from diesel to propane to improve air quality.
How has your Core Plus innovation strategy powered the firm over these last 30 years and your hopes and expectations for the next 30?
So what we like to say is we are a trusted local distributor of energy to local communities. Today it's propane, but we're here to innovate for the future and to be able to provide for the comfort and safety of our customers who rely on us for their energy needs. long into the future.
Okay, this one is really cool. As if all of that already weren't cool enough, and the stock is up 1.4% today. You're the official propane of NASCAR for what they call propane-powered track dryers. I looked at these things last night. These are cool machines. How does that relationship come together?
So they came to us as part of their sustainability. Those track dryers used to run on kerosene, and they wanted to get to be a cleaner air quality for fans and racers and pit crews alike, and so they wanted to switch to propane, and we looked at them and said, we use a lot more propane than just track dryers. So now we're providing concession propane. We provide propane for all the campers that come to enjoy the race. We help fill up their tanks if they're running low, and we're providing propane for temporary heat and backup power. It's a great relationship.
Like I said, the machines are awesome looking.
Yes.
Before I let you go, talk to me a bit more about what that relationship means for NASCAR. I mean, what an iconic household brand name to be associated with.
It's the most popular spectator sport. Yeah. You go to these races and the fans are just unbelievably passionate, and those fans are our customers. You know, we're in every rural community in 700 locations throughout 42 states. We serve 1 million customers, and we find that most of them really care for the NASCAR brand.
Michael Stavala, President and CEO of Suburban Propane. Thanks for being down here. Congratulations on ringing the bell and having a pretty good-looking tape today, up 1.4%. Nice to have you here.
Thank you. Thank you.
Don't go anywhere. A lot more Taking Stock coming up right after this. Time now for the latest headlines in the world of startups, raises, and rounds you need for your Tuesday afternoon. First up, prediction market platform Polymarket is in talks to raise another $400 million at a $15 billion valuation as trading volumes continue to surge and rival Kalshi pulls ahead in terms of valuation. Next up, Vertical Aerospace securing up to $850 million in new funding as it hits a key flight milestone. Also pushes its Velo Air tax program towards a targeted 2028 expected certification. And finally, Jeff Bezos is close to securing a massive $10 billion funding round for his AI startup called Prometheus, and it values the company at $38 billion as investors continue to bet big on industrial artificial intelligence. And now Money 2020's very own Scarlett Sieber is back to explain all the ways that fintech companies really make money. Take a look.
Welcome back. I am Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. The series where we stop yelling, "This is the future," and actually ask, okay, But how does the business work? Today we're going to be talking about Rain. Let's make it rain. Get out those umbrellas. A stablecoin company doing something truly radical, making crypto boring enough for companies to actually use it. Rain builds enterprise-grade stablecoin payments infrastructure. Not trading, not speculation, actual payments. Cards, issuing, settlement. The kind of financial plumbing businesses care about when money needs to move now across borders with fewer fees and fewer surprises. So how does Rain actually make money, you might ask? First, transaction fees. Every time an enterprise moves money across Rain stablecoin rails, there's a take rate. Not flashy, but durable. Second, interchange revenue from stablecoin linked card programs. If it walks like a card and spends like a card, the economics start to look very familiar. Third, platform and API fees. Enterprises pay for access, integrations, uptime, and reliability. And fourth, treasury and float revenue, tied to how funds sit, settle, and move through that system. Here's what's really important here, folks. A lot of people still think stablecoin companies make money the same way crypto exchanges do. Volatility, speculation, hype cycles. Rain is doing the exact opposite. Their business model is designed to remove volatility entirely and make stablecoins infrastructure, not an asset class. Let's do a momentum check here for a second. Rain's major late-stage rage in Q1 of 2024 was seen as a turning point, not because of the headline number, but because of the thesis behind it. Investors weren't betting on crypto prices. They were betting on regulated stablecoins becoming a real part of the global payment system. So what is their moat exactly? Compliance, licensing, and of course, trust. It's easy to build a demo payments product. It's incredibly hard to build one that enterprises, banks, and regulators are comfortable scaling with real money. And that, my friends, is how Rain actually makes money. Not by hyper speculation, but by turning stablecoins into infrastructure CFOs can sleep at night because they're so secure with it. Because in payments, boring isn't a bug, it's the feature. Have a fintech company you want us to feature? Drop it in the comments below, and it just might make the cut. Back over to you.
All right, and live at this hour, despite reporting growing profit for the quarter, United Airlines currently trading down after hours 0.7%. Tomorrow morning here on Wall Street, we'll get the latest quarterly results from GE Vernova, Boeing, and AT&T. This time tomorrow, the latest from Tesla, IBM, and Southwest. That'll do it for today's edition of Taking Stock. Thanks for watching. We'll see you again tomorrow.